Welcome to the September 21st, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your fast-paced tour of the global financial markets. President of McGowanGroup, team of 9, the team that cares, a great place to consolidate for retirement with a cash flow-based portfolio. This tour is designed to take your knowledge to the next level on investing and help all of us to make great decisions each and every week. The Dow Jones Industrial Average, we have the year-to-date here, the fall of 38%, the recovery to almost recovered, and now about just below 28,000 after this week's trading activity. The technology components have become dangerously overpriced in historical terms, and they've been driving the indexes. What's happened since then? After they drove the indexes, this is the tech-heavy Nasdaq 100, the top 100 companies in the Nasdaq, primarily driven by the technology rally. The premise was COVID immunity, rising revenues as the pandemic forced everybody to stay at home. We've moved into a different environment. The third quarter is about to end. The GDP forecast, which becomes more and more accurate as you finish up the quarter, 25% growth for the economy. That's a big shift. And what is that shift likely to produce? Well, the first thing is you could see the Nasdaq with over a 10% correction just in the past 2-week trading session. And does that signal a 1999 type tech wreck? It's a danger that could range bound the indexes for an extended period like they were from 2000 essentially through 2012 before making a permanent new high. And how do we deal with that? Well, first you want to get paid a lot of cash flow, but also you look at where are the dividends for companies who are recovering. And I have a fun example, not a recommendation for your portfolio or mine at this point, but I have an example of what the pandemic recovery looks like in some of the best opportunities, and that really is in the value index, the S&P value index sitting right here, and you'll notice it's about 15% below its high. And that's the state of most of the market right now as we come out of the pandemic. We had mentioned airlines, travel, and leisure. That we're not going to consider until December. Much of the equity can be cannibalized as these companies borrow more money to survive. The return of travel in 2021 is the key question. But for the bargains now, we're about to see those third quarter reports in October, and we'll have more updates, boots on the ground. Where are the improvements? Another economic read as we go through here, this is money flows on a weekly basis, and we post this at NetWorthRadio.com. And you can see this past week, money exiting the S&P 500 for the one-day flow, and for the week, $2 billion entering, $25 billion has actually flowed out of the S&P 500, $12 billion into the Nasdaq that I mentioned. And what we're seeing here as we look at real estate is money outflows. The mid-cap has gotten a lot of negative outflows. That's something to watch. But there are opportunities created by what you see here. The emerging market bond index has been getting steady money flows since the March outflow. And the global high yield premise is one that can still pay a lot of income, very attractive, because what did the Fed say this week? They said interest rates will be zero through 2023. That's the first time they've issued that kind of forecast. But what else is happening concurrent with the Fed saying rates stay at zero? We've returned to near 2019 in the level of durable goods orders. Here we've got inflation back for 3 months in a row as the Fed said they're going to keep rates at zero. This could be a shift in inflation that will impact, I believe, 2022, and it'll start to get built in. Inflation, one of the best hedges has been energy, and we're working to refine the infrastructure, the energy holdings at this point, because that is probably one of the most effective inflation hedges. And you can see inflation for 3 months in a row, essentially above the 2 years prior. That is a return of inflation at the same time the Fed's not going to do anything for a while. A very interesting environment for 2021. Now, here's what happens when the pandemic ended and companies start to reopen. GameStop is based here in North Texas. It's an interesting company, had a very, very good week. This is the year-to-date chart. They were essentially left for dead. Because why? Well, a big part of their revenue is retail, gamers, equipment, things like that. Their online effort had a huge increase. They got a private equity infusion right in here, and they're projected to make $1.40 next year by one of the analysts, and they're trading at $9. I'm not advocating GameStop, but what I'm showing you is similar to Brinker International, which we covered last week. They went from 8 to 48 as the restaurants reopened. And so as things start to reopen, you change. You change likely to a more value approach, and which companies can explode earnings having survived the pandemic with the gradual reopening in process. We're watching that close. Be sure to go to NetWorthRadio.com, fill out the preliminary client questionnaire. We'll be here each and every week at YouTube McGowan Group, and if you subscribe, you'll get alerts, especially when we have a timely update and market events, and we've had many of them in 2020. We help clients not to liquidate into the panic sell-off and to stay at or near record income. That's the key as we go forward, because for 2021, with money markets at zero, cash flow highly attractive, and you're likely to get appreciation from high cash flow assets. Thank you for tuning in. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.